All right, what's going on, guys? So, weekly recap and expectations for next week. This video might be a little extended. I'm going to be covering a lot. So, let's jump into it, starting with the macro. As always, here is your January and June equivalent peaks, the green and yellow that you see here. Your January and June peaks right here. Again, the price action this whole time, generally speaking, is above the 200 EMA in both cycles, above the 200 EMA. Macro break in the blue box right here, breaking below the 200 EMA and starting the descending wedge. So here is the first bounce off of support, cross the 200 right here as the green transitions into the red. Over here, same thing, crossing to the downside, crossing back to the upside over the 200 EMA as the green transitions into the red. Red to blue, same thing, come down to support, bounce up, cross the 200 again, red transitioning into the blue. Over here, same thing, come down to support, back up to resistance, cross the 200 EMA, and then the price action crosses the 200 to the downside and remains below the 200 EMA until you drop to your flat portion. Same in both cycles, so below the 200 EMA, drop to the flat portion, double top move, second bottom is higher than the first on the daily. Tri-peak, and then your all-time low, lower low landmark, the point at which support and resistance of the descending wedge meet. That is your bottom. From there, you form an uptrend into your squeeze, a macro reset. So again, the most macro trend on AMC being here in white from IPO, first touch point, second and third as support, fourth and fifth as support, break below, reject it, and then reject it 3 more times for the flat portion, the original, breaking above it for your January squeeze, testing on it, confirmed, into your June squeeze, and then all the way through the macro again. We are establishing support on this trend and about to find a bounce off of it, the gap up that we're looking for. This trend is going to zero roughly at the beginning of 2024. Keep that in mind. And one more thing before I move on from this. The original bounce off of this trend, the bull cycle of AMC, was a 92% move, more or less, approximately 92% move. In the current macro, the move was 1,200% to the upside. For the next macro, we are on the verge of seeing our macro break. I'm expecting a higher percentage move, i.e. my price target of $1,400, which is based off of Fibonacci extensions, and it is not a very conservative, but one of the more conservative price targets that I have. So that is pretty much that. Now, moving on to the tracking that we've been following all week, and this has played out absolutely perfectly. This was Tuesday, I believe, calling for downside. This was the price action that we got leading up to the July after hours move 100%, and this is the current on the right. And I've been tracking this for a few weeks now, followed perfectly all the way through with the exception of this wick. I spoke about that already. This pre-market wick, you could ignore that. But this is where we left off Tuesday. I was calling for more downside to come to the bottom of the channel here, again, to establish support. This was, hold on one second. This was Wednesday and Thursday. So that was Tuesday, and then this was Wednesday knifing, and then Thursday even more to come to the bottom of the trend. And then we bounced off, and then heading into the Friday chart now, here it is. So we bounced off, came back up to the top yesterday, the top resistance, came back down to support, bounced off right in the middle, exactly what we were looking for. I laid out the price action pretty much at the beginning of the week, and it's right here. This was in Discord. So starting off, could just chop up here till mid/end of day before we sell off. This was Tuesday. So this is where we were right here, that pump that we got at open on Tuesday. We were chopping around the mid $8 range or low $8 range. And then pretty much noon until close, selling off. Continued sell-off into Wednesday, they consolidate the bottom. Continued sell-off into Wednesday right here, consolidate the bottom. And then chop Thursday, forming support on the bottom, as we did. Thursday, come back to the bottom, chop, bounce off, start the climb back up Friday into a potential after-hours rip. So started the climb back up Friday, hit the top trend once again. We did not get the move after hours on Friday. I am fully expecting it to be on Monday pre-market, and I will get into that. So that's pretty much that. We tracked this perfectly the entire time, all the way through the week. Here's without extended hours. This was Thursday, I believe. So I mentioned the break below this uptrend that you see here in orange. The only break below was Thursday open. You reclaimed Thursday towards close, and then Friday, this was the move up to the trend, down to support, bounce off, close in the middle. That's what we were looking for, and here is the updated chart. And that's exactly what we got. So this was Thursday, breaking below, and then Friday, reclaim, come down, bounce off, and close in the middle. Exactly what we were looking for. Moving on from that. So this was the projection that I laid out on Thursday. I drew some lines here. This was the price action I was looking for. Pretty much saying after hours pre-market would be flat, looking for a down spike at open. A V recovery to the top of the trend, 820 to 830 range, reject that, come back down to 770, find a bounce into end of day, and then looking for the macro, the micro break here, the gap up after hours. So this is what we were looking for, and I left the lines here, and this is with the price action now. So we didn't get the down spike as drastic as I was looking for, which is fine, doesn't really matter. We've seen multiple times throughout, tracking this iteration, the open candles have been very volatile to the downside, and then usually you V out of that. We didn't get the down spike. Well, we did get a down spike here, but just not anything near what I was looking for. But then we did bounce to the top of the trend here, which is really what we wanted to see, testing this trend again. I said 820 to 830 in my last video. High of day was 831. So we rejected that, looking for a pullback. We pulled back, didn't come as low as I thought we would on the pullback, and then bounced up into end of day, pretty much closed right where I ended my line here. I was looking for a close $8, 801 would have been a very nice close to see. Pretty much battled for 801 all day on Friday, and then after hours we closed $7.99, right around that $8 mark that I was looking for, and then saying we're looking for a gap up after hours or pre-market. So with that being said, I'm using this as reference. I spoke about this in my video yesterday. I'm tracking the July movement that led up to the gap up. I'm tracking this compared to the current price action. I'm using this as reference, but this is not where we are on the macro. I'm just using this as fractals repeat, and this has played out perfectly. So just for landmarks, I've been using this. But what we're really tracking here is the third bottom of the flat portion. I've covered this multiple times as well. This was the January 2021 cycle on the left, the drop down to the flat portion, the chop, the gap up out of it, and your double peak move down to your second bottom, which is a higher low on the daily. Over here, same thing. Come down, chop, gap up, double peak move, second bottom, higher low on the daily. From both the second bottom in the previous macro and the current, you gap up into your tri-peak, 3 pokes above the yellow horizontal line, which this is your macro break line on both cycles. And then from your third peak of the tri-peak, knifing down to your third bottom, the all-time low and the lower low. So from the lower low, you form an uptrend here. Ascending channel, and we have an ascending channel in the current. So here are the EMAs. I've mentioned multiple times throughout, the past month or so, that the price action would eventually meet the 20 EMA. The 20 EMA is the white line here, coming down lower and lower every day. Currently is sitting at 1035, I believe. And I mentioned the EMAs are perfect, just tracking the movement of the previous macro to the current macro, looking at the EMAs, exactly what should happen here. We're looking for a gap up over the 20 EMA, and I'm assuming we're going to see that Monday pre-market. Looks very strong for that case. At which point we gap up. I'll get into price targets. I'm leaning $45, $40 to $45. We will pull back, and then from there we get our macro break above this yellow line here. So that is that. Here's the actual channel itself. So here's the flat portion. Here's the third bottom, the lower low. Here's the third bottom, the lower low. There is a channel here, an uptrend that you have in both cycles. Here's the uptrend. This is what we're actually tracking on a macro level. I'm using the July move as reference. This is really where we are on the macro. So coming down to your third bottom, the lower low, and all-time low, you form this cup that you see here, and then you drop down, and this is where you're fighting for the trend. The uptrend line in orange Here's our orange uptrend line dropping down from the cup and fighting for support of this trend. This movement right here is actually January 15th, which is exactly what the price action was on Friday. It was January 15th. And I'm going to show that side by side now. We're looking for this gap up. This is what's coming next for us, is this gap up here. And the price target, theoretically, of this gap up, just landmark-wise of the flat portion, should be this green dotted line, which would fill all of the open gaps on the daily that we have and take us up to about $40 to $45, from which we would pull back to roughly $25, $30, form support there, and then we would get our macro break. So that's what we're going to be looking for going forward. So I said that yesterday, Friday's price action was January 15th, what we were looking for, the reclaim of the trend. And looking at this side by side now, here it is. So this is January 15th on the left and the current on the right. Your two peaks, second one's higher, come down to the trend, bounce off of it as support, as you see here, V out of that, and then close above the trend. Exactly what happened here. Literally played out perfectly. Close 799. I was looking for an 801 close. That would have been pretty wild to see. On the release of Dumb Money, you know, the battling for 801 on Friday, it's just craziness. So that's that. Here's a different perspective of the flat portion. What we're looking at here is the original on the left and the current on the right. And I mentioned most of the price action here, we were playing out on top of the previous flat portion as support, but our third bottom, the lower low and all-time low, here it is. Just a very dramatic move down. Again, we're looking for a move up to this green dotted line, $40 to $45. It's very possible we get a move to $16 first, pull back to 10, and then get the rest. It's also possible we just straight line straight to 45. I don't think we're seeing any downside here. We've seen this iteration play out multiple times. It's all over the chart. This type of bottom on AMC is generally bullish. I don't think there's ever been a time where we played out this pattern and broke to the downside. I could be wrong, but this pattern generally, which you see here, you see here, you see here, you see here, this pattern, this bottoming formation on AMC is generally a bullish pattern. So I'm looking for a move up, and we're looking for $40 to $45. So here is, I'm being dead serious, here's what I think the future of AMC looks like, the price action. I've covered multiple times, and I'll start with this one first, actually. So this is AMC's macro, a weekly chart on the right and a 1 minute chart on the left. This is January 15th. This is pretty much what Friday's price action was. This is what AMC repeats over and over again on every time frame. So this is a 1 minute chart versus a weekly. The W in the yellow, W in the yellow. First peak, January peak, right there. Pull back to a W ascending, pull back to a W ascending. June peak right here, and then you get the flag, the downtrend, 4 touches on the top, 3 on the bottom, 1, 2, 3, form an uptrend from the third bottom, reject twice, form an uptrend from the third bottom, reject twice, and then you knife into your V. The V is more or less an inverse head and shoulders, and from there you get your fractal break. Here it was a micro fractal break, a 1 minute chart. We're looking for a macro fractal break. So again, the knife into the V is more or less an inverse head and shoulders. That's what we're looking for. So here's what I think. Here's what I think the price action looks like for AMC going forward. So we're looking for a gap up now to $45, $40 to $45, which would fill all of the gaps on the daily. Again, we could get a move to 16 first, pull back to 10, continue upwards to 40, 45, or we could just straight line all the way up to 45, fill all the gaps, pull back to $20, $30 from there. There's your inverse head and shoulders into your January squeeze. I'm assuming this would reject, you know, where we got the previous. There's a this is the median line for AMC, the mean line straight across here. So your January peak topped out and rejected right there. It's very possible that's what we get again before we pull back into this type of price action that you see here, which would play out faster because we're tracking faster because there's more volume. So the macros of AMC, as volume is being injected into the market, the macros of AMC are playing out faster and faster. And each macro would then end with an all-time low. So this is where maybe Citi gets its $5 price target, because I don't think we're coming down to $5. I don't think it's a shot in hell. We're going to be reversing here. So maybe the next macro of AMC is where you get your $5 price target. So you top out at the January, pull back briefly, as you see here, into your June squeeze, your June peak, which that would be the $1,400 move. And then just a reiterating, there's your downtrend, the wedge, and then your all-time low landmark, just, stair-stepping like that. And again, as volume is increasing, this is going to play out faster and faster. So here's the first macro, the second macro, which is playing out faster, twice as fast actually, because there's more volume. And you could see that here. Very low volume, volume picks up, descending volume all the way through the macro, and then again picking up at the end of the macro. So that's that. And then the last thing before I end it, actually one more thing that I forgot to mention here. So from the beginning of the flat portion until your peak was 343 days. From the beginning to January 27th, 343 days. From the beginning of the current flat portion to where we are now, we're on day 303. So 40 days off is exactly 1-to-1 for the flat portion. Next OPEX date is October 31st. I'm not sure how much relevance that has. I'm not sure if the OPEX dates have any relevance. I've just covered that multiple times because both peaks of this current macro landed 7 trading days post OPEX. Next one's October 31st, but it's possible, there's no relevance there. I just wanted to point out that the flat portion, we're literally 1-to-1 right now. So 40 days off is the peak, theoretically. I think it's going to play out faster, but who knows? So that's that. RSI, volume, and OBV now. So here's the weekly perspective of AMC. From IPO, the descending wedges, the breakout retest. Here's the volume profile, decreasing volume all the way through the macro, increasing at the end into all-time high volume, decreasing volume from there all the way through the current macro until the end where it starts to pick up once again. So again, volume is sitting at all-time high levels right now. The green volume of the macro is outweighing the red all the way through, which is why OBV is still sitting at all-time highs or near it. Here's the descending trend on OBV, double retest here, pulled back and now curling back up towards the upside. If we do get that gap up we're looking for next week, which I'm very confident that we will, OBV on the weekly should cross all-time highs next week. And at the same time, RSI on the weekly is still oversold. So that's that. That's pretty much it for the video. I think this pretty much speaks for itself. Calling the price action all week, highs and lows, what we're looking for, the close Friday. It looks great. I would be very, very surprised if we didn't get a gap up next Monday. Do we go straight to $40? Who knows? It could be a slow climb, like I said. We could go $16 first. Where can I show this? Could go to $16 first, pull back, and then you get the shot to 40. It could just go straight to 40. We just have to see how it plays out. But I am expecting a gap up 100%. So this is tracked perfectly. There's no reason not to believe we're gapping up. And that is pretty much it for the video. Hope you guys have a good weekend, and let's fucking go.